The markets anticipate maturities and coupon payments next week. How will they impact the outcome for system liquidity? Chuka Nwachukwu, head fixed income trader trading at UBA, joins me for more market updates. Chuka, thank you so much for taking time out to join us today.
Thank you.
So let's start with today's market action. What did we see today? Where on the yield curve, what did we see investors playing?
Well, today has largely been flat, typical of Friday trading. During the week, we saw a lot of activities, especially on Monday, where we saw inflation figure came out, about 25 basis point movement, and then also the bond auction, where we have about 150 basis point movement at the larger and the longer end of the curve. Okay, so this week, basically what we've seen in the market so far has to do with the liquidity issue. Liquidity constraint, and so that's why we've seen the market has largely been bearish.
Now, I know that you've been following the news around just a quick comment from you on the federal government's securitization of the 20 trillion CBN Ways and Means loan, 40-year bond at 9% coupon rate. I'm just thinking to myself, as an investor who's already invested in the one-year Treasury Bills, for instance, at 13%, what is the incentive for me to invest in that bond at 9% over 40 years?
To be honest, when I saw that 9% for 40-year bond, I thought to myself, maybe it's just a proposal, because I don't think that it will attract any investor. You cannot have a one-year security Treasury bill trading at about 13%, and then you're thinking of giving a 40-year bond, even if it's 20-year bond at 9%, when 2025 is trading around 14.5. So I think that there will not be a lot of interest in that. I believe that government will probably has to review that the yield. Yeah,
that is more a likely scenario, going back to the table and turning those numbers around. Talk to us about, treasuries. We've seen investors just basically, we had a conversation yesterday, pricing inflation at the market. But what is the investment play right now, especially for institutional investors? This is a market, the only place, to a large extent, where they can play. But we're seeing yields trending higher. And I remember I asked you yesterday also headroom for yields, and you said there's still a bit of headroom left. Can we start talking about 15% on the short dated?
On the short dated, we probably will be seeing around 13.5. But there's still a lot of incentive in terms of the movement in yield. We still see around 16.5. Currently, the 2037 is currently trading at 16 already. The last auction came out at 16. That's 2037, and so there's still a lot of opportunity. The market also. It's also, apart from the inflation that is driving the market, also the market has also largely been driven by illiquidity constraint in the system. And so
do you see this persistent? Because week in, week out, we talk about liquidity, the situation of state of liquidity in this market. Is that something that's here to stay perhaps to the end of the quarter of the year?
Yes, I don't see any respite within the next 6 months, as long as the CRL policy continues, as long as we see activity slow down on the fixed income side, especially the government activities. I don't see any respite, on this.
There's still one more monetary policy meeting for the year. Do you see the CBN? What is the market thinking in terms of decisions that could be taken on the monetary policy side? Especially around the CR, of course, liquidity will be the focus for the market. Yeah,
funny enough, the last MPC meeting, I said that we're looking around 50 basis point hike, and then they did 100 basis point, and so inflation has also gone up. However, I should think that in the next MPC meeting, I don't think that CBN will be aggressive, if at all they need to measure up on the monetary rate. All
right, Chuka, we'll leave it there. Thank you so much for talking to us today. Pleasure having you on the show today. That was Chuka Nwachukwu, head fixed income trading at UBA.